Trading Tip Tuesday for Brave New Coin. Let's take a look at some information on the VIX, which is getting a lot of chatter and discussion lately. And if you want me to discuss anything specifically, let me know in the comments below. I'm kind of running out of things to talk about, but some of you were asking about the VIX, so I thought I'd dive into it deeper. Now, if you ever see me talking about anything about legacy, it's because it directly pertains to crypto, whether it be metals or something like the VIX, which I have no business actually discussing, but here we are. So CBOE VIX. CBOE is the Chicago Board of Options Exchange, as opposed to the CME, Chicago Mercantile Exchange. And VIX stands for Volatility Index. It's important to know that this is implied volatility, which means future volatility, and not historical volatility, which is a measure of what's already happened. So as it states here, it generates a 30-day forward projection of volatility, and it's used as a gauge for fear or love, as some refer to it. That's why it's often referred to as the fear index. And it's expectations for volatility in the coming 30 days, as it says here, risk, fear, stress, when market is volatile, right? And there are a ton of tickers and options, and there's a VVIX, which is the VIX volatility. So it goes on and on and on. But as crypto gets bigger, specifically BTC becomes a part of the volatility conversation. It becomes a part of risk on, risk off conversation. And that's why the VIX is a way to sort of predict the potential of what's to come, and also to look at spikes in the VIX as massive buying opportunities historically. Specifically, I mean, we all lived through March 2020. It's one thing to read and hear about 2008 and not necessarily trade through it, but to be here for Corona, to see that spike in the VIX, I'll show that in a second, and to see the spike down in BTC, along with everything else, despite being, an inflation hedge or disaster hedge, it didn't work out that way. Here are some more tickers. There are tons of tickers that you can look for if you're interested in trading this sort of thing. There are leveraged tickers and all sorts of stuff. But I wanted to talk about the history a little bit. I think it's important to understand where it comes from, where the value comes from. So in 2003, they introduced a new methodology for it. But prior to that, if you're familiar with Black-Scholes, if you're familiar with options, you know what IV is, because that is used to price the options in some sense. So if you're an options person, you already know what most of this is. But they started trading it in 2004. They launched an options product in 2006. In 2008, conveniently enough, when the crap hit the fan, VIX hit a high of 90. And then in March 2020, it closed at 82, 83. And the VIX is sort of a way to gauge chaos in the world, right? Like, this was happening when there was a Corona travel ban in Europe. This was happening when there was the oil shenanigans, right? Oil went to zero or negative on futures, just like absolute craziness. And in general, historically, the VIX lives below 12. Anything above 12 historically has been more of a risk off period. And I think that's really like the bottom line here is when VIX returns are higher, market participants are more likely to pursue investment strategies with lower risk. So if VIX increases and BTC goes down, that tells me BTC is more of a risk on asset than we perhaps want it to be at the moment. There are lots of articles like this on Investopedia if you're interested in reading this further, but it all sort of says the same thing. Again, fear index. So VIX spikes are not bullish for crypto. They're bullish for buying the dip, sure. BTFD if the VIX spikes, for sure. And it's important to pay attention to it because, like, in March 2020, when the VIX spiked to essentially an all-time high, if you're not paying attention to that, then you're maybe thinking this is a failed experiment, right? And if we look at historical VIX dating back to 89, you can see this is probably on the weekly. Actually, this is the monthly. So a monthly high was definitely 2008. But we got pretty close as far as a monthly close in March 2020. So we're still trying to eat away that implied volatility. And currently it's at its lowest level since pre-March 2020. And I've said for weeks on the legacy vids I do that this journey to 12 or less is incredibly bullish for BTC because it generally indicates more of a risk on trading mentality. So again, VIX's stock market volatility trends inversely with the SPX. Another way to say it is not favorable for risk on conditions. low VIX is low volatility stability, high VIX is high volatility. And again, there are lots of tickers for this. And we can see VIX in all sorts of different ways on various platforms. On TradingView, it doesn't really show it past 2011, I think, depending on which ticker you're looking at. So again, you can just see here, most of the time we're living below 20 certainly, which is why that spike above 20 in March 2020 was considerable. Currently 17 or lower, depending on how you want to look at this on a monthly, weekly, daily basis. But VIX has slowly been starting to climb, and some people are suggesting that we're ready for a massive breakout in the VIX, which would be bearish for crypto. Here are a ton of tickers, right? Like there's gold VIX, there's SPX VIX, blah, blah, blah VIX, there's leverage ETF VIX stuff you can trade. So there's tons of ways to express that interest should you so choose. Like I said, the VVIX as well is another one. Barry was talking about the UVXY, which is a leveraged volatility index, and he goes on to say several reasons why we're expecting this, and I think it's funny that he goes further to say that 99% of crypto is overpriced, considering Grayscale services many of those cryptocurrencies. So he thinks of it as a volatility hedge. Lots of other people talking about this. Sven, which is Sven Heinrich, I love him, but he is a perma-bear and has been bearish since I was born probably. And we continue to squeeze higher on this wedge and people like Sven just continue to redraw this wedge, right? But what he's showing here is that historically, as we're wedging out, volatility, the VIX, goes to extremely low levels, and then we experience this breakdown, this dramatic drop in price, rise in the VIX. So to see it coming from anybody other than Sven, I'd be a little more on edge. You know, he's got bear goggles on, and that's all he's looking at. But I can't say he's wrong, considering, I mean, the data's right here, right? You can see exactly historically what's happened when things have looked the way they've looked, and SPX and NDX look considerably overbought, so I can't disagree with him there. And this isn't the VIX directly, it's a ratio, it looks like, of the VIX to the SPX, but problematic certainly for future volatility. And here's another way to look at this. 2016, 2018, the beginning of 2019, and then 2020 were all massive dips in BTC price and all of crypto really. And aside from this 2018 dip, all of them went on to massively higher highs. So that's important to think about. You know, is this going to be a 2018 situation if VIX breaks out, or is it going to be every other situation, every other time where it was basically a multi-year low at that point? And BTC itself has a historical volatility, and anyone familiar with Bollinger Bands can also tell you that, yeah, once you have this calm before the storm, you're setting yourself up for this massive breakout. So I initially thought that TA on the VIX is kind of silly, but it makes sense when you think about it. We go through these boom bust cycles on the VIX and just markets in general. So as much as I want the VIX to continue to go to 12 or less, that's looking less and less likely in the near term with all the shenanigans going on. And maybe we see VIX explode as early as this week with the FOMONC meeting. Here's another historical volatility index, BVol, something else you can look at if you're not looking at Bollinger Bands directly and you're waiting for a price move one way or the other. We can look at just the historical movements. Typically, we don't get extreme squeezes in low volatility conditions, but both high vol and low vol conditions help set you up as in a mindset, right? Like if vol is going to zero or a historical all-time low, you can't just expect nothing to happen in the near term, right? This was before that breakdown in 2018 when we basically went flat for a couple months and then we exploded in volatility on that price breakdown. Somebody else was saying the other day on Twitter that we don't make all-time highs in low vol environments, and we're currently in a lower vol environment based on what they were looking at. Here's the chart. So this is from a Bloomberg analyst using the BLX, but they're looking at the 260-day volatility of Bitcoin versus the SPX, and they're saying that, look, all these all-time highs were at historic highs in volatility relative to the SPX, and we're currently basically at an all-time low in volatility relative to the SPX. They also have a nice pitchfork on here, which I can get behind. Not exactly a pitchfork, more like a trend channel, but VIX is definitely important to just look at every once in a while. You know, you'll hear about it when you hear about it, like periods like now where everybody's talking about it. So knowing what it is and how to use it and what to look for is certainly going to help form and shape your trading decisions. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.